What's up, everybody? Welcome to the Daily Dose. Today is Wednesday, August 3rd, and we saw a huge rebound day here on the stock markets. The S&P 500 was up over 1.5%. I believe the NASDAQ might have finished up over 2%. Over 2.5%. And the Dow Jones was up 1.3%. And really the story of the day was... It seems like the market is starting to price in a Fed pivot. And I'll get more into this weekend on the weekly wrap, but the market's starting to price in that they think that the Fed's going to have to pivot on how they're fighting inflation. And even though there's been a lot of Fed speak this week talking about how they're not even close to doing that, and they're still in this fight against inflation for the foreseeable future, it seems like the market is expecting them to have to pivot into a easier environment. And I think that's dangerous, because I do think the Fed is going to have to keep fighting inflation, which means they're going to have to keep tightening the economy. And I think the market pricing in this pivot too early can be dangerous, because I think we are seeing job growth slow down, which is reinforcing the idea that we're in a recession. But honestly, it just comes down to the dangers of the White House lying to the American people and saying that we're not in a recession. That, combined with this outlook by the market, which basically the market's saying that the Fed is going to have to pivot, is really saying that the market is expecting a recession, that the market expects economic environments to get bad enough to the point where the Fed can't tighten the economy anymore. And I think that inflation is not under control yet, that the Fed is going to have to keep tightening, and there's not really going to be a workaround for that, and that the markets will then have to price that back in, and it'll send markets lower. I think that's a real danger of what's happening right now, but it is never a bad thing to make money, and a lot of people made money today, so you got to look at the positives. So this just talks about earnings, not interested about talking about those right now. So Wednesday's moves, that's today, followed down day on Wall Street. That saw stocks close consecutive sessions down. Nancy Pelosi went out of Taiwan today, and she went to South Korea. And it was actually really interesting because she went to South Korea to speak with their leaders, but the president of South Korea actually wouldn't meet with her, because he only meets with world leaders, and he did not consider Nancy Pelosi a world leader, so that was interesting. But I just thought it was interesting how yesterday we saw that hawkish Fed speak, saying that the rate hikes are still going to be carried on throughout the rest of the year and for the foreseeable future to fight inflation. They said that they were not even close to being done fighting inflation, and the market is yet pricing in a pivot. So I thought that was interesting, and it could be dangerous if the markets elevate even higher and the Fed tightens the economy even more, and the job market collapses and the housing market crashes. I mean, we could see a really, really big downturn if that happens. So be careful. This was the S&P 500 today. Really just bought the whole day. It was general just buying throughout the whole day, up over 1.5%. Nothing really to see here. And Bitcoin, we said Bitcoin's been moving with the NASDAQ. The NASDAQ was up a lot today, and we saw Bitcoin tick up. Bitcoin's trading at just over 23,000 right now, and we saw an article come out. It might have been from JP Morgan. I might be wrong on that, but one of the big banks came out today and said that the fair value for Bitcoin right now is 40,000. So that's really interesting. That would be almost a 100% increase from where we're at right now. But just some things to keep an eye on. Make sure you're doing your own due diligence about what you think is going on in the markets. Don't get caught up in the FOMO or the euphoria of the stock market rallies right now. You really have to keep in mind what the Fed's doing and the bigger, broader economic environment as it pertains to the job market and the housing market. And yeah, I just think us going from 0% interest rates to what could be around 3.5% at the end of the year is it's just hard for stocks to rally in that environment, especially if we're simultaneously entering into a recession. So stay safe out there. Make sure you're doing your due diligence. Don't get caught up in the FOMO. Thank you for listening, and be sure to tune in tomorrow. Thank you.